Episode 203 of Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everyone, thanks for tuning in for this episode with Ellen Wald. Before I play that interview for you, I want to give a shout out to the great sponsors of Futures Radio Show. CME Group, Trading Technologies, RJO Futures, and Top Step Trader. To learn more about these sponsors and the important things they are doing for futures traders, be sure to click on their logos on our website. Now today I spoke with Ellen Wald, president of Transversal Consulting and author of the book Saudi Inc. Ellen shared with us her very interesting and inspirational backstory on going from academia to writing and consulting. We discussed her book Saudi Inc., and we chatted a lot about Saudi Arabia, where they like the price of oil, how much they're producing per day, and who is buying most of their oil. We talked about the current price of oil, and if she thinks it's driven more by technicals or by fundamentals. Ellen explains to us what's happening in Venezuela and gives us her thoughts on the upcoming OPEC meeting. As usual, thank you all for listening, and please enjoy this episode. Ellen, welcome to the show.
Hi, good to be here.
It's great to speak with you today. I started following you on Twitter a while back. We've had some conversations prior to this in messaging, and you sent me your book. I started reading it last night, and although I'm only through a part of it, it's fantastic. So I'm really excited to speak with you today about the book, upcoming OPEC meeting. Of course, we're going to talk about Saudi Arabia, Venezuela, and more, but something I think could be the most interesting part of our conversation today is your backstory and how you went from an academic, because you didn't see a career there for you, so you saw a sector that was booming, and then you put your knowledge to use in writing and consulting, and now you have this very popular book, Saudi Inc., and you have your own consulting firm, Transversal. I think this is very inspirational to many people out there. So let's start there, Ellen. Can you please share with us your journey on getting to where you are right now?
Sure. So I started out, I did a PhD in history, and I really wanted to study business history and businesses, in particular businesses that were in the Middle East, because that was always a big area of interest for me. And so I wrote about American and British oil companies in the Middle East in the 40s and 50s. And the problem with that was that was not what academia was interested in. And I really just didn't see a future for someone with an interest in big business, particularly oil companies and energy in that region. And so I decided to leave academia and kind of create this new, essentially, career for myself. I started writing more for popular audiences, for people who really had an interest in the oil industry and energy. And there were a lot of people. That was back when oil was really, really high. Things were booming. And then when oil dropped, I realized that I knew something about Saudi Arabia because they had really caused this price drop, or they'd really accelerated it in a sense by refusing to do some sort of deal in OPEC and cut their oil production. And everyone was saying, well, Saudi Arabia can't handle it. They're going to have to go back up. They're going to have to cut their production. I said, no, there's no way Saudi Arabia is going to do that. They know that they have certain advantages and they will come out of this better than anyone else. And that was really what inspired me to start writing and to really kind of explain to people what was going on there so they could better understand Saudi Arabia's motivations and therefore what they were doing with oil. And that led to more things, and it led to me even starting my consulting firm, where we basically have a network of scholars and other experienced professionals who have knowledge about different kinds of areas and motivations. And so we use them to help educate clients about the motivations of different players, particularly in the oil industry, so that they can then take that knowledge and make decisions about where they think things are going.
I love the backstory. I think it's very inspirational to those out there that maybe aren't happy with what they're doing and have knowledge, and you've really put it to work. And like I said, this Saudi Inc. book is very popular. A lot of people talking about it. I'm curious as to how you got your research done for this book, because as I started to read it, there's a lot of information out there. How did you go about putting all of your resources and getting a lot of this information for the book?
So the first part of the book, a lot of that information comes from research I did actually for my dissertation in graduate school. I really wanted to learn about these early days of, oil in the kingdom, but there are no documents or anything like that in Saudi Arabia. So I looked in State Department archives because I realized the State Department was really close with the oil companies and did a lot to really facilitate the interactions. And so I found this incredible treasure trove. They wrote down everything back then, down to like dialogue and conversations that they'd had with different Saudis. So that was really a huge treasure trove of information, along with some private archives. And then for the later parts of the book that take place in the 70s, 80s, 90s, and 2000s, I did a lot of interviews. I talked with a lot of people who had been in the oil industry, former Aramco employees who had recently retired, people who grew up in Aramco, different Saudis former executives from the company. I interviewed one of the former CEOs, Frank Jungers, which was a really interesting experience. And then I talked with a lot of young people also. So I did get a lot of information from interviews. I also relied on books that had been published about Saudi Arabia, people who had done exclusive interviews with members of the royal family too.
How long did it take you to write this book?
So the short answer is it took me between, I would say, about March of last year and the end of August last year, which is really when I wrote the bulk of it. I'd written about a couple chapters beforehand because in order to sell a nonfiction book, you need to have the first couple chapters written. But I really went back and redid a lot of it. And so I'd say basically between March and the end of August.
Now, I want to talk a little bit about Saudi Arabia, and there's a lot of people say, Saudi Arabia needs or wants $80 to $100 a barrel of oil. What do you think about that?
I don't think that that's true at all. Saudi Arabia might prefer it. It might be nice. It certainly gives them some breathing room in terms of all of the economic reforms that they're pushing that are quite expensive to implement, but it's not something that they need because they can produce oil at a lower cost than just about anyone else in the world. So when everybody else is, when everyone's selling their oil for, say, $30 or $40 a barrel, Saudi Arabia is making more money per barrel of oil than anyone else. And their oil company is, from what I can tell, we haven't seen the financials, but it's fairly efficient in how they spend their money and the way that they invest their money. And Saudi Arabia itself has, going into that oil price drop, they had $800 billion in foreign cash reserves. That's just money in the bank. I think they're down to about $500 billion now. So when you compare that to a country like the United States, which has trillions of dollars in debt, you can see that Saudi Arabia might prefer $80 to $100 oil, but it's not a necessity in any way.
And what price does Saudi Arabia not want to see oil?
I think they really don't want to see it too high, in particular because they see that oil prices that are too high, like $120 or $130 a barrel, that just makes all sorts of other oil in the world much more economical to produce. So that's why we saw all of this oil coming out of the United States, oil coming out of Canada, oil coming out of Venezuela, because when it was so high, they could produce it and sell it and make money. And they see that as a bad idea because they're producing oil resources that really aren't economical to produce. So I think they prefer it basically probably in the like $60 to $80 range.
Basically where we are right now. Yeah. So talking about current day, we just talked about how oil is in that, in the $70 range right now. from someone like you who obviously you're watching more fundamentals versus technicals, but you speak to people that follow both fundamental and technical analysis. So I just want to get your gauge on what you think that people are thinking about this price of oil right now. Do you think that most people think that it's fundamental, technical, or both?
I think the real answer is both. I think there are some fundamental issues at play here. People are looking at the drawdown in inventory, so they are seeing the supply and demand come kind of more into balance. But at the same time, there's a lot else going on that's kind of playing with the market. I think there's a lot of speculation that tends to spike things and cause these kind of spikes or drops that are not necessarily reflected in fundamentals, like you said, but could be caused either by, algorithms recognizing that something's happened. It could be caused by a geopolitical event. It could just be caused by simple volatility and speculation. And so that plays a much greater role in the market than I think people want to admit.
I want to talk about the Iran sanctions a little bit. Obviously, this has been widely talked about on social media, pretty much everywhere. Where are we in the implementation process, and what does this mean for oil?
So this is a really interesting thing because when it first came out, everyone's like, oh no, the United States can't do this. The only reason that it was successful the first time around was because they got all these European companies on board. They got all the European countries to basically implement similar sanctions. And they're saying now that's not going to happen. But what I'm hearing is that actually these U.S. sanctions are a bigger deal to European companies than people want to admit. So while the countries are going around saying, we're with you, Iran, we're not, we're going to keep implementing this deal, that's fine. They can say that and they can keep implementing the deal as long as Iran doesn't start producing, nuclear, doesn't continue with its nuclear activities. But companies are going to make the best decision that they're going to make for themselves. And there really isn't a whole lot of companies aren't doing that much business with Iran. It doesn't account for that much of their business. And so they would rather do business with the United States than they would with Iran. So I think we are going to see a lot of companies pulling out of Iran. I know Maersk has just decided they're not going to ship to Iran at all. That's a huge deal. And so I think that people are going to find that the sanctions will affect more than they thought they would affect. I'm not sure necessarily how effective it will be in producing political change in Iran, particularly because Iran's economy was not doing well under the JCPOA when it was in place. It really was not doing all that great. Not a lot of companies were going there, especially in the energy industry. I think the only big company we saw going there was Total, and they were getting ready to potentially pull out anyway. So I think it is going to have a bigger effect, just not yet, but we are going to see it playing out definitely in the second half of this year.
Yeah, funny you say second half of this year. A lot of people that I speak with also say the fourth quarter is when we're going to see the impacts. But hearing you talk about this, is it going to affect the price of oil more, or is it going to affect companies that are in the oil industry more?
I think it's going to affect both. We have seen it already affect the price, and I think that unless we see increased production elsewhere, it's going to affect the price of oil in that people think it should affect the price, so it will. So there's kind of this, like, I guess they call it like a risk premium, but could be already baked in. But as long as it keeps up, even if we don't see Iran oil production going down, Iran may continue to produce just as much oil as it has been. The issue is whether it can sell it. So the real thing to keep an eye on are Iranian exports, not just their production, but how much they are in fact exporting.
Okay, I want to move on and talk about Venezuela a little bit because this was something I recently learned on an interview here on Futures Radio Show, and it was an interesting stat that Venezuela actually sits on more oil than Saudi Arabia. I didn't know that. And then we were talking about how they are cutting production. How could Venezuela, who sits on more oil than Saudi Arabia, have issues with production? Talk to us about what's happening in Venezuela.
The situation in Venezuela is it's so sad. I every time I write about it, I just feel for this place so much. So essentially, Venezuela had had a lot of oil. I think it had about 80 billion barrels in its proved reserves by like 2005. And then once we saw the development of these new techniques, particularly some of the techniques in fracking and in oil sands, they began to basically say, oh, here's all this oil. Now we can actually put into production, so we can convert it from, say, like probable or possible reserves to proved reserves. And so by the end of 2010, they had, I think they listed their proved reserves at about 297 billion barrels, which is higher than Saudi Arabia, which says that they have 260 billion barrels of proved reserves. Now, keep in mind that these are self-reported numbers, so we do have to take it a little bit, with a grain of salt, because we haven't seen any real numbers. These countries don't share their numbers, although Saudi Arabia may share their numbers soon. So part of the reason that Venezuela is having such an issue is that its oil is expensive to produce. Not just because it's difficult to produce that oil, but also because of the way their company runs and their country and things like that. So they really needed higher oil prices. But essentially what happened is you get this weird combination of the fact that their oil industry it's very expensive. The oil is very expensive to produce. They relied on hydroelectric power for electricity, and they had a horrible drought. So when you combine that, terrible for the population. And they don't have enough electricity in these places to really produce that oil. Then you've got a socialist state that had all sorts of other industry, but then essentially expropriated it and put all the money that it used to put into, say, agriculture and manufacturing, put it all into developing the oil industry, which was great when oil was $100 a barrel and everyone was saying, oh, Venezuela is such a model socialist state. But when oil drops to $40 a barrel, they're in huge trouble. And their oil industry was not particularly well run. It's not a very well-run company, and they can't afford to pay the workers who are out in the oil fields. They can't afford to keep the lights on. They can't afford to keep pumps running, and they can't afford to pump that oil. So Venezuela's production has been steadily dropping over time. I think their allocation for OPEC right now is, I think, 1.97 million barrels a day. So it's below 2 million barrels a day. They really, I think, would probably want to be producing up. They can produce over 2, and it's just been dropping. I think in April they were recorded by, I think Platts said that they produced only 1.41 million barrels a day, which is incredibly low.
So compare that to other countries in production. How big of an impact is that going to have on the oil market?
I really think that this is the real story of the oil market. So everyone said back, when Al-Naimi refused to cut production, and everyone said, oh, it's the Saudis versus the shale, and the Saudis are trying to kill shale. I don't think the Saudis were trying to kill anything, but what they did do with their all-out production and basically cutting prices was that they killed Venezuela's oil industry. They didn't necessarily kill shale or kill other things, but they definitely killed Venezuela's oil industry. And this is really, I think, the story of where and part of the reason why OPEC has been so successful with its production cuts. Part of it is Saudi Arabia did cut more voluntarily, but Venezuela's production has just dropped off. Angola is another country whose production has also dropped off, and that has made OPEC very successful in reducing the inventory overhang.
So I want to go back and talk to you a little bit more about Saudi Arabia's production. How much are they producing a day, and who is buying a majority of that oil from Saudi Arabia?
So that is a great question. So Saudi Arabia is producing under 10 million barrels a day right now. I think according to the latest survey, so according to the latest Platts survey, in April, they produced 9.95 million barrels a day, which is under their allocation of 10.06. Now, they say they can produce up to 12 million barrels, or I think up to 12.5 million barrels a day, and they have produced upwards of more than 10 million barrels a day. I don't think they particularly want to. It stresses the fields. It doesn't give them the opportunity to do maintenance work on their fields and things like that. Who is buying their oil? So a lot of people are buying their oil. China is a big purchaser. Japan is a really big purchaser. The United States still buys Saudi oil. yes, we produce a ton of oil. We produce technically as much as we need, but that doesn't mean that we use it all, or we can, and we still buy Saudi oil. Places in Europe buy it. South Korea also buys Saudi oil. But I would say that Asia has become a big buyer of Saudi crude. India is definitely up and coming, and the Saudis want to build a refinery. In fact, they have a deal to build a huge, I think the biggest refinery in India, because they really want to penetrate that market. And the way that the Saudis, when they want to penetrate a market for their crude, they go in on the downstream. So they go in, they build a refinery, they have own a portion of that refinery, and that includes long-term contracts to buy Saudi crude. So they kind of get guaranteed sales, and then they get profits from the refining business.
Yeah, very interesting. Now, our final question for today before we get into rapid fire is the OPEC meeting. Ellen, what do you expect to happen at the June 22nd meeting, and what impact do you think that's going to have on the oil markets?
So I hate to make predictions, mostly because all predictions are always wrong. But what I think is going to happen at the OPEC meeting does depend in part on how Iran and how other countries react to the Iran sanctions. I think that the Saudis have a unique potential with this OPEC meeting. They really want to keep their kind of OPEC plus group together. And not only do they want to keep it together, they want to solidify it for the future. And so they can either just keep going the way they've going, but I think we're going to see some movement from them trying to maybe potentially relax some of the allocations. If they don't relax them, formally, if they don't say, okay, look, everyone can produce, 0.1% more, we may see them basically give the okay to certain countries who have really chafed under the production restrictions, particularly Iraq or Kazakhstan. And every time there's an OPEC meeting, Iraq and Kazakhstan threaten to leave. They would say, we don't want this, we can't do it. They may relax some of the allocations basically in order to get them to stay in this deal and to stay in this group. Because to them, having a group that can react and can kind of manage oil markets is a greater benefit than, say, having, $100 oil.
Thanks for the insight. It's the first time I'm hearing that perspective, so thank you for sharing that with us. All right, we have rapid fire questions next if you're ready for those.
Okay, let's go.
All right, everyone, our rapid fire segment is sponsored by Trading Technologies. Access the global markets from virtually anywhere with TT. They are the world's fastest commercially available futures trading platform. And now you can trade cryptocurrency spot and derivative markets side by side. For more information, please visit tradingtechnologies.com. Ellen, first question. Who in the energy industry has influenced your life the most and why?
That's a great question. I would say maybe Ali Al-Naimi has been very influential in how I formed my book, particularly his story I found very inspiring. He really came from nothing, and he had a particular vision that really formed the company and put Aramco in Saudi Arabia on a path to really make more money than they could have. And when I got to meet him when I was in Saudi Arabia in November, it was a really fulfilling experience.
What was one of the hardest things that you had to overcome in your journey from academia to now writing and consulting?
One of the hardest things I had to overcome was changing my writing. I was very used to writing for an academic audience with really long sentences and lots of clauses and kind of hiding your meaning. And I had to totally change how I communicated because people don't want the main point hidden. They want it right out front and center. And that was a challenge, and it's something I'm still working at, but it's something I really enjoy.
How have you evolved from academia to writing and consulting?
I've definitely become a lot more cynical, I think, about maybe the way the world works. Academia is very much a bubble of kind of learning for maybe the sake of learning. And I think I've learned that people want to know things that they can put into action. So if I can tell them something that they didn't know about, say, Venezuela or OPEC or shale production, and that they can then put that into action, then I've helped them. So in a sense, it's more cynical, but also more what's really valuable to people.
What's the number one resource you spend your time on?
Definitely Twitter. It's definitely a number one resource. Also, probably a number one time waster, I'll admit. but I have learned so much from the different people that I've met on Twitter and the different things that they bring to the table, so much about trading and markets.
What's your favorite book about energy markets?
Other than my own, I would say either Crude Volatility by Bob McNally, which I read last year's fantastic book, and also maybe Al-Naimi's Autobiography was very interesting and provided a lot of insights into Saudi Arabia and where it's going in energy.
What's your favorite movie or TV show about trading or the markets?
That's a really great question that I'm having trouble answering. How about a favorite TV show about business? I would say Last Man Standing is my favorite TV show about business and how to kind of go out and make it on your own, and that there are a lot of different ways to be successful and to be successful in business.
What's the best piece of advice that you've received about the markets?
Don't just assume that someone who maybe is an expert has the right explanation or prediction for something. Just because someone who seems like they're an expert or has a high prediction says they know what's going on, that doesn't mean that you can't assess the situation and come up with your own decision about what you think is really going on. And it doesn't mean that they're necessarily right. You could be just as right as they are.
If you can give a piece of advice to the new people interested in getting involved in the energy markets, what would it be?
Take the plunge.
Last question for today. If you weren't involved with writing, consulting in the energy markets, you'd be doing what?
I would be writing young adult fantasy and science fiction.
Nice. Ellen, this was awesome. Where can people find you on Twitter? And give us a website to check out.
Sure. People can find me on Twitter at Energized Economy. That's ENERGZD Economy. Or they can find me on my website, eleanorwald.com. They can send me an email, or they can visit my business website, which is transversalconsulting.com.
Everyone, you know where I stand. You absolutely have to follow Ellen on Twitter and check out her website. And, of course, get her book, Saudi Inc. Ellen, it was a pleasure having you on Futures Radio Show today. Thank you so much.
Thank you. I had so much fun.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.